Being right about a level doesn't always mean a winning trade. Today, I'm breaking down the raw truth behind a max loss day. I'll break down the footprint absorption that signaled the reversal, and I will also break down the mental framework that I use to process 3 losses in a row without emotional trading. This is the part of the business that no one else shows you. But I'm not gonna stop there. I'm gonna show you exactly how I use the volume profile to find high quality buy and sell zone, aka supply and demand, and also show you how you can confirm the trades using the footprint charts. So without further ado, let's jump into the video. You have been seeing me taking trade after trade, win after win, showing you how you can combine the volume profile with order flow to find high conviction, high quality supply and demand zones and confirming them with the order flow. But now we are doing something different. I'm going to show you a day where I struggled a lot. I took max loss on this day, and I actually took one more trade that I even shouldn't, even though the market actually did exactly as predicted. But I will show you the raw truth about trading, that even though you're correct about your analysis, that you can hit the max loss anyway. So let me break everything down. And if I would say a con about using order flow is this, but this truly doesn't happen often, like especially if it happened to me 3 times in one single day. So let's break everything down with TradingView. So by looking at this market, I actually longed the market right here, and I will actually show this to you in my school community. I think it is better to watch it from this print screen in this school community. And by the way, guys, this school community is 100% free, and I have a very extensive course on how to trade the volume profile and order flow using auction market here, all for free, no strings attached. So make sure to join. But looking at this, I had a very confusing day. And in this one, I didn't want to make the post super long, so I didn't break down all of the losses, but I even had one more loss than I broke down right here. So the first trade that I took, it was a 4.41 hour trade. Very good confirmation, very good zone. But what happened was that I got taken out right here with this wick, and the market went to my target. And then the next one, and this was the location where I took it. Of course, I'm going to show you the same thing in this video, so you will see me exactly why I took this specific location. And the next trade where I shorted, or this was the long confirmation. Let's go to the trade where I shorted. I only incorporated one of the shorts here. I actually took 3 shorts during the New York session, 2 of which was a stop loss. The third one, which according to my rules, I shouldn't have taken, but since the playbook and the confirmation was so damn good, I actually took it. But what happened on this, it is like the karma, right? If I break my rules, the market won't give it to me. Look at this, 8-hour trade, beautiful playbook. I have a playbook specifically for this type of price action. If it wasn't that as clean as this, I wouldn't have taken it because I already hit my max loss. Beautiful play, 8-hour trade, beautiful target, all of that. Look at what happened. Market pulled back, took me out break even, and then dropped. So with that being said, let's break all of this down so you can actually learn a thing or two about using order flow and the volume profile to find these high quality levels. So with that being said, let's jump into 𝗧𝗛𝗧, which is my professional order flow software. And there I can show you the volume profile and the order flow much better. All right, now we are in the professional order flow software 𝗧𝗛𝗧. And I will show you exactly why I longed this low, and let's make it full screen so you can clearly see it. So I actually longed this low. I will show you the confirmation. I actually shorted right here. Look at this. I longed this, got wicked out by a stop loss. I shorted this top, got wicked out, and the market went. Of course, I was targeting this area of demand, but yeah, this would have been a break-even trade, but it was a full loss, okay? The market rallied to another significant area. I saw a confirmation. You can clearly see it right here. 789 of buyers came into the market, but market went lower, aka sell limit order. Shorted, got taken out by a wick. But this is it, like 3 trades, 3 losses. I should have walked away. But when I saw this lower high playbook that I have in my, like this was a beautiful confirmation. I couldn't not take it, right? And it wasn't out of revenge trading. It was about how beautiful this sell trade was. Just looking at this volume profile inside of this price action. Look at this, pull back to this, beautiful. Also, this is just an intraday volume profile. We're gonna use a higher time frame one. So with that, let's go to the higher time frame one, and let me show you why I wanted to take the buy and those 2 sells, which kind of worked out without me. So That's the thing about the markets. The only thing that you can do is to control risk. That's the only single thing. You can't do anything else. You can do your analysis. You can find your levels. Like in my case, I use context, location, and confirmation. I can only do those three. I can't decide if I'm going to get wicked out, right? So let's look at it. So if I'm seeing all of this range, and price was, let's zoom in, price was right here on the London open or London low, and this is where I shorted, and this is also where I shorted. So if we're gonna see why I longed from here, shorted from here, and shorted from here, this was the area of supply. But not only that, I'm gonna always confirm my areas of supply with the volume profile. So if I draw the volume profile right here, and I'm highlighting this area, so I want to make sure that I don't incorporate that specific day. This is that specific day, and this is that low. Okay, so we are seeing that the sellers are pushing. Sorry, I want to incorporate this as well. Look at this. I want to incorporate all of this volume. And you might be asking, why do I want to incorporate all of this volume? Let me just give me 1 sec. And my computer screen was going in power saving mode. This one as well, my upper screen. So why do I want to incorporate all of this volume? Because I want to see where the institutions are positioned if we are inside of these price points. It's pretty basic. But if you want to learn exactly how to do it, you have to join the free school course. There I will in depth break it down. So let's mark all of this. So we see that the London low, let's remove it from, I don't want to incorporate the London low so you don't think I cheat or something. The London low tapped the point of control where the most amount of transactions or where the most amount of business was transacted. And at this specific low, we got the best possible confirmation. And what was this confirmation? So let's mark this out as a level, first of all, so we can look at the confirmation next up. Let's see if I can mark it as gap. I don't want to take on the whole chart. So this will be a buy zone, and you can clearly see why. Market is trending bearish, but I'm trying to align myself with a big institution. I'm trying to align myself with a strong buyer. And when I enter the market from a strong buyer's perspective, the only thing that can stop him is the strong seller. And where are the strong sellers positioned? At this area of supply, at this high volume node, this point of control, market went there and dropped. And it actually, let me see if I can show you this as well. You can clearly see on the delta, this is where we have the most amount of selling that day as well. See, look at this, 987 of sales. I think this was actually bank holiday, and that's why it wasn't a large amount of volume, but it was the most amount of selling at this specific general area. But not only this, I'm not going to use just an intraday profile. I want to see in what areas that banks think it is cheap to sell, right? And where is expensive or cheap and stuff like that. So if I take this is a shelf, and if you go through the full school course, you will understand what a shelf is. So if I just mark it like this, I don't need to be super precise right now. This is that shelf, and then we have this shelf. Oh, sorry, I didn't mark it correctly. I was looking something else. We have this shelf. Okay, so this is an area where it's cheap to sell because we didn't spend a lot of time and volume there. So if price goes there in a bearish market, we will drop down. So now that we have marked our zones and this area, would this be a shelf? Yes, but I like this one a little bit more. Why do I like this? Let's refine it even more. Let's have something very sniper. I would mark it like this. Sorry, not this. Yes, like this. This is where we have the most amount of volume, and this is where we are tapering off. And guys, if you want to understand exactly how to mark shelves and stuff like that, go through the full school course. So let's go. M5, let's look at these lows. This was the London low where I took the long. If I place a yellow line right here and go to the footprint chart, let's go to that yellow line. This is that yellow line. And since I was trading London, I was using the 15 range, I guess. Let's double confirm. It depends on what type of session I trade, right? If it's the London session, I'm not waiting for a, let's say, no, I don't think I used the 15. No, I didn't use the 15. I went slightly above because London is a low volatile, low liquidity session. That is why I can't use a 5-point footprint chart like you're seeing me doing on other. Yeah, look at this. So at these lows, inside of this very good area of demand where we had the most amount of volume being transacted, and this was price action over, let's say, how much was it? It was, let's check actually. Let's not guess. So if you go to the M30 chart, so I am here, I'm trying to show you the long that I took right here, and the price action that I measured, it is literally, where's this measuring tool? I never use this though. It is literally, I don't see it, 61 days. It is literally the volume of 61 days. And the point where the most volume was transacted during those 61 days was at this exact tick, at this exactly point of control. And this is why I wanted to take the buy trade from there. And the confirmation for this was so clean. Let's go. Footprint. This is why I decided to long. You see that there is a lot of selling coming into the market, but as a result of all of this selling is that the market actually went higher. So no follow through. These sellers are punching a wall and not going lower. Of course, this is a very good sign to long. So I longed, stop below here. I actually placed my stop slightly below this as well. One tick, but market took me out. Not a great confirmation to long, to be honest. This is 10 out of 10 confirmation. This, nah, I don't like it. But we actually get a higher low with a B shape, more sellers. But this 10 out of like 11 out of 11, like 11 out of 10, especially during the London session. But this one, just because of the location was so good, I would have taken it. I don't know. I don't know, guys. It doesn't like this, super clean. The rest, nah. And then market rallied, went to the target. Instead of giving me a 4-hour trade, it went to the target without me, taking me out. Sucks. Either way, market went to the target. And now we're getting that sell area. So let's look at the confirmation here. So if you go to the footprint, and yes, this one is not going to show perfectly. Let's switch. Yes, this is that sell area. So if I remove this, this is that general sell area. And this was the high that I shorted on. Yes, there we go. So we are in the sell area. So a strong buyer pushed the auction higher to a strong seller. And now I am on the 6-point footprint chart, because the 5 points was printing next to each other and the data was getting skewed. So this is why I say that I use different footprint charts based on different scenarios. So here we are seeing that the buyers are trying, they are failing. We have trapped buyers, we have a P shape, market drops below, we close below the area where previously buyers were strong. Pullbacks, confirms, strong selling comes in, stop here, let's go. But what did the market do? Pull back to this, took me out, and then let's go. So again, another losing trade. Even though I'm showing you this high. Let's go full screen again. So the thing is, when you break all of this down with the Orderflow software, they are not as intuitive as TradingView. So you're seeing that the chart is lagging a little bit and flipping and so on. It is because most of the Orderflow software, they are processing a lot of data, and that is why they are not so intuitive. Either way, enough of that. This is the high that I shorted on M5. Market took me out, went lower. To be honest, this trade would have been a break even. I would have targeted this low. I was targeting above this wick right here because this was an M30 demand. Break even. So keep in mind, I'm 2 losses deep this day. So I have only 1 more loss that I can take according to my rules, according to my risk management thing. And we went higher to the upper supply, reacted to that. Again, a lot of trapped buyers. Let's go and look at the footprints. I have to check first if I was watching yes, here we can see the footprint chart. So we are going up to that high and we are seeing again a P shape. If I remove this, look at this, a lot of trapped buyers, market goes lower. And I didn't enter on just one P shape. I actually waited for a pullback to see if the pullback held again. Again, a lot of trapped buyers, market went lower. Took me out, not as good of a confirmation, dropped. Where the confirmation got very good, I don't know if you see the numbers. Here we have 299 of buyers. So much more than these prior candles. So with that being said, market dropped. And here I really thought I missed it because this was a very high quality level. But this is where I decided to enter the short again. Because if the sellers stepped in right here, they are now buying lower. And this was 10 out of 10 confirmation. We have, let's go deep into this. Let's go and break this down deeply. So all of these candles, the average number of contracts are 100, 150. But in this one, we're getting even more buyers that are getting trapped. 226, 195, 75, 158, and then heavy selling comes in. Breaks below this area, and this is where I decided to short. So this trade actually worked out, but of course, came back, took me out break even, confirmed again, and now do I want to take the next trade? Is this truly like following my rules? I already broke it just because I took a lower high play. Perfect confirmation, but is this over trading? Yes. If I would have taken this would have been a 8-hour trade, but still following my rules, not over trading, although I did have 1 more trade that I intended to. But as you saw right here, going back to M5, this is the highs that we were looking at the order flow. So me shorting this high, getting taken out instantly, and shorting this high, becoming a little bit happy that the market went lower. Market went all the way up here, put in a lower high and dropped. Maybe if I shorted this, I would have got break even again. It was a very long time ago. I saw 4 lower highs like this. But eventually market dropped. Not only did it drop, it melted. So the thought process was good. The contextual bit was good, but the timing and the entry was not as good. Like looking back at it and journaling, this doesn't hurt me at all. I don't really care about 3 losses. What would have hurt me like this day, now that I took the 4th trade, even though my trading plan only allows me 3, this was it was all right. Based on experience, I understood that a drop was imminent. But if I wouldn't have taken this trade as well, even though if I won, that would have been a very big break of my trading rules. Like I'm over trading at this point, right? I'm trying to short 4 times at a high. Imagine if this took me out break even as well. This emotional feelings after taking so many losses and over trading, this would have messed me up more than taking 3 losses in a row. 3 losses in a row for me, it's like nuggets. Like every trade I take it's a like almost minimum 3R. So it's nothing. I'm good with taking 3 losses, but I'm not good breaking all of my rules. Okay, that gives more emotional hurt than not following rules does hurt you more emotionally than following them. So the only thing that you can do in the market is to manage risk, do your analysis, place your trade, and the rest is up to the market. And this is a very clear indication of that. This is a very clear proof of that. So with that being said, I think, and this video is it's been longer than it needed to be, but here you will see me struggle as well. I'm not going to show you always winning trades. So with that being said, watch the rest of the videos on this YouTube channel. And if you want to learn the full strategy all for free, no risk, no strings attached and nothing gate kept, just go to the school community, which is in the description. And if you like this type of content, like and subscribe, and talk to you in the next video.